Now, gold's been a bit tricky. I had resistance up at 1775, 1780 was my resistance level on the way up. Now, gold fooled me with this spike up here, or when was it? It was early last week anyway. We got up to 1787. We got up, we hit some selling, the market closed lower, almost a bearish engulfing candle. So that rang some alarm bells for me. I thought, okay, we're overbought. We're in a short-term bear trend. We've got that massive double top on the weekly chart that I've talked about for weeks. I thought, right, that's it. Gold has turned. We overran the my resistance level, but then we posted this negative candle. Anyway, then now we burst higher again. So it's really tricky, this little patch here. Very tricky. I'm kind of betting on 1770, 1765 being a support level now, and it certainly did work on the dip on Friday. It just shows you when the market gets spooked about inflation, when the market gets spooked about a stronger economy, gold always takes a tumble. Just bear that in mind with the CPI number. We get a strong CPI number, I'm pretty sure gold will take a tumble. But even if we get a weak CPI number, is gold really going to rally that strongly? I don't think so. I could argue that this is a bear flag, quite a steep one, but I could certainly argue that this is a bear flag. I think that's probably the point. Yeah. So if we do eventually break to the downside, if we do eventually break 1760, I would say, or even just 1765, really, yeah, 1765 would be a negative signal for me in gold this week. And then I could sort of say, yeah, that was a bear flag that I spotted. The 50-day moving average offering a little bit of resistance, although we did spike above it. It's a messy picture, but what I've got to focus on is the fact that we do have that big double top pattern on the weekly chart. That's a negative. Okay, yes, we did hold a very strong support level down at 1680. That wasn't a surprise. That's where we were buying, if you remember, and we did pretty well on that trade. That will be another big support level if we get down there, but I'm not going to worry about that today because we're 100 ticks away from it right now, so I'll worry about that next week. Yeah, really, the best summary I can say for gold is that we are in a bear trend, and this is a bear flag, and we will probably break to the downside. We would definitely have to get well through. Well, look, even if we get up through the high of 1795, 1800, and you can see I've got that as a minor resistance level there. Even if we get up through 1800, let's say we break up through 1805, we're going to run into this area here. We've got longer term fibs. We've got a confluence of fibs up at 1825, 1830. We've got the 500-day moving average, and not far above it, we've got the 100, which is coming down, and the 200, which is flatlining. So I don't see a lot of upside for gold. Even if we do break higher next week, I'll examine if we do happen to get up there, but I fancy a move to the downside eventually. Now, interestingly, we've actually had some divergence as far as gold and silver are concerned. Silver's always been the weaker of the two, or has been for quite a significant period of time. Now, I had a really nice resistance level up around 2010, 2030. That has worked beautifully. The 50-day moving average, the black line, my trend line, my fib levels, all adding weight to that level. So if you were selling into that level from the cheat sheet, from my trade sheet last week, you've been scalping quite nicely. Hopefully, I think eventually we will break to the downside. We did get down to 1955 on Friday, but we've had a strong bounce. So just watch that low $20 area. And as I said, I'm looking for a move to the downside. We've managed to get overbought now, just as gold has got overbought. And being in this bear trend, you know, that just does also make me feel that I should be in a short position, probably. The weekly chart isn't really telling me an awful lot. Not really, although the 200-week moving average is certainly doing its job, isn't it? Look, let's see if that moving average has done its job in the past. Not brilliantly, to be fair. We've overrun it quite a bit before the market turned down. Right, moving along. Quick look at oil, seeing as I'm looking at commodities. I don't really have a very strong opinion on oil. I think it's going to continue lower. It's tricky because there was no real pattern here that told me that oil would turn. Although I did manage to catch, we did manage to jump into a short, didn't we, at one stage. Now, we've got, okay, these are the reasons why I think oil will probably go down a little bit further. We've got potential moving average crossover here, the 50 crossing below the 100-day moving average. That's a longer term negative signal. You know, these crossovers are lagging indicators, but I think we broke below the 200-day moving average, which was a really good support level for a while. We're not holding on to the 61.8% fib particularly well. Well, I say that. Okay, we're hovering around it. We have seen a bit of a bounce and we're getting a little bit oversold. But having broken below this trend line, which is at 90.35, I think it's going to increase pressure to the downside. I don't really have a strong opinion. If you said to me, you know, I want you to put 3 trades on right now, I wouldn't be looking to put a trade on, particularly in oil, but I do feel that we have got some more room on